Now, the state of the property market as we draw to the close of 2022, is it good or is it bad? Keep watching to get my take on that question. Now, my name's Kevin Wright, and I've been brokering property finance for over 20 years. And I've been teaching people how to intelligently use property finance for the last 10 years. So what's going on with property right now in the UK, and what can we expect over the coming months into 2023? Let's drill down and have a look. Well, first, let's get a bit of perspective. Roll back a couple of years to spring 2020, when we were in the midst of the first lockdown of a global pandemic, in fact, the worst pandemic for some 100 years. Now, at that time, a lot of hand-wringing going on and people predicting doom and gloom for the property market. Prices were going to plummet or at least drop anything from 5 to even 15 or 20%. Maybe you recall. Did that happen? Well, the doom and gloom merchants couldn't have been more wrong, could they? As you well know, actually the reverse happened, didn't it? We had a bit of a property boom. In fact, prices spiked and we had two very strong years of growth. Back half of 2020, all of 2021, and the first half of 2022. In fact, some estate agents have had their best ever business figures in the last couple of years. So a couple of years of boom time, but what's going on? Is that sustainable? But first, what were the underlying causes of this rampant sellers market that we've had in these past 2 years? The stamp duty holiday in 2020 was clearly a big influencer, as was the expansion of work from home. Work from home as a concept moving forward rather than a reaction to not being able to travel to work or congregate with other people during the initial COVID lockdowns and the subsequent lockdowns too. So huge swathes of people searching for a new main residence, more distant in varying degrees from their workplace or their previous workplace, now made possible by the implementation of work from home in its variety of formats. Now, these main residence buyers were giving landlords a tough time over the last couple of years because there's no profit motive for them. They just want somewhere fabulous to live, and they're prepared to pay for it over the asking price in many cases. Now, despite the fact that there's this school of thought that says that landlords are locking out main residence buyers from the market because they buy multiple properties, actually the reverse is the truth. Landlords are not going to compete on price with main residence buyers because they need to make a margin, need to make a profit out of it. Main residence buyers don't. Now, the autumn of 2022 precipitated a spike in Bank of England base rate rises and consequently mortgage rate rises, particularly buy-to-let mortgage rate rises. Now, no big surprise that took the froth off of buyer demand as main residence buyers and landlords alike re-examined their costs and what they could afford. Now, mortgages weren't as cheap as they've been for probably the best part of the last decade. How is that translating into the property market? Well, Zoopla produced a report showing that in the space of a month, searches on their portal dropped by approximately a third. Now, if that's maintained, it would suggest that buyers are exiting the market in some substantial numbers. And those estate agents, well, they've been pretty busy the last couple of years, haven't they? But I'm starting to see reports now of people being called by estate agents because they were looking at a property earlier in 2022 and the estate agent asking, are you still looking for something to buy? Which would lead you to conclude that agents, at some of them at least, are perhaps not as busy right now at the back end of 22 as they've been earlier in the year.
Hey, have you subscribed yet? Click that subscribe button down there and that dingy belly thing so you don't miss any of my videos when they're released, which is every week. Great, thanks. I almost forgot, Instagram. Click that button too. Look, it's down there. Thanks.
So what's caused this change in the market from a rampant seller's market to not necessarily a buyer's market quite yet, but certainly not such a strong seller's market? It wasn't just the fallout from Brexit. It wasn't just a large proportion of those work from homers returning to the workplace environment. It wasn't just Russia invading Ukraine. Now, a combination of all those things led to a rapid spike in inflation. In fact, the worst inflation, in fact, the highest inflation for 40 years. Locking down the world's manufacturing for months on end during 2020 has, not too surprisingly, resulted in a shortage, not too surprisingly, led to shortages of pretty much everything. And there's a time lag until manufacturing has got back up to speed to somewhere approaching pre-COVID levels. Naturally, that's led to a spike in prices, food, energy, pretty much everything else, raw materials, property materials. Now, with prices rising faster than wages or earnings, the natural response is for people to pull their horns in and say, hey, maybe we're not going to buy that property or buy that extra investment property just right now. Now, if people believe prices are going to drop, there are going to be certain sellers that think, whose response to that is, better get my property sold before it drops any further then. So how does this affect the property investor? Let's have a look at that, shall we? Now, I run a number of events in different cities in the UK, and from chatting to the investors that I've seen turn up there in the past few months, they've seen buy-to-let rates rise from somewhere around 2%-ish to somewhere around 6%-ish. And clearly that means that profits from renting property are going to be eroded, at least in the short term. There's a limit to how much and to what degree landlords can pass on these higher mortgage costs to tenants by increasing their rent, because there's a finite amount that tenants can afford to pay, given their energy bills and food bills, etc., are being squeezed as well. So clearly, everyone's experiencing some pain right now. And the question that's increasingly being asked by investors is, how can I continue to make a living in this environment? Now, if you already own properties and you're renting them out, whether it's in the residential or the commercial sphere, the answer really isn't anything more than grit your teeth, bear it, and ride it out. Now, interest rates may not come back down to the level that we've seen for the last 10 or 12 years, but the probability is they're going to come back lower than they are right now. So some investors will no doubt jump ship and sell. The rest will just tighten their belts, batten down the hatches, and wait for it all to pass, which hopefully will be in a year or two's time. For properties that you might want to buy going into 2023, well, a greater focus on the price you pay is going to be needed, isn't it? Now, the simplest way to create more margin in a new property you buy is to buy it cheaper. If you buy it cheaper, you borrow less. If you borrow less, you've got a bigger margin. Last time we had this spike in inflation to higher levels than we've actually got right now, interest rates on mortgages were around 11 or 12%, but they didn't stay there. They came back down. As inflation dropped, the rates on mortgages also dropped. And the expectation would be that a similar phenomenon would occur this time around. I think it's pretty clear to see that 2023 is going to be challenging. 2024 probably still challenging, although hopefully less so. 2025 and beyond, back on an even keel. Now, in the last big economic downturn, which was the credit crunch of 2008/9, and the aftermath of that, some people created some substantial property portfolios. And the opportunity to do something similar is likely to present itself over the next year or two for those people brave enough to jump in and keep buying, although keep buying at the right price and the right property, of course. Now, I'm seeing one of Warren Buffett's most famous sayings being quoted a lot right now. You'll probably know the one: be fearful when others are greedy and greedy when others are fearful. So in property, the last 2 years have been the greedy phase, haven't they? People couldn't get enough property, weren't too bothered about what price they paid for it, would be prepared to pay what they had to pay to get the property. So that type of buyer is probably much more fearful right now, which gives the more savvy buyer the opportunity to be greedier perhaps in the next year or two than they've been in the previous year or two. So there we are. That's my property chat for this week. And hey, I'll be back next week with another property finance video. See you then.
If you enjoyed watching this video, did you know every Monday morning at 8:30, I do a live Facebook Q&A. So if you want to start the week with checking out some answers to your property finance questions, click the link here.